SoFi ended up showing off their Q3 2025 earnings results on October 28th, where we ended up getting to see the press release and earnings presentation, but that did not include the 10Q. Officially, we are now seeing the 10Q, the form that's being sent to the SEC, which includes a lot of additional details that we didn't originally see in their earnings. So let's start with lending and eventually get into many other aspects of new details that they showed us in the 10Q. First up, in student loans, we ended up seeing originations climb up to the new highs, and interest rates continued to climb even in the face of rate cuts. We also ended up seeing a quarter-over-quarter decrease in the amount of defaults on student loans. Home loans is exploding in the amount of overall originations, where the amount of interest rate earned also climbed up quarter over quarter, and the amount that they've been earning for interest has more than 5x over the last year. Okay, going from $1.7 million a quarter to now over 10 million. I'll explain some of that and how they're actually housing some home loans on their books. But for student loans, we ended up seeing interest rates stay very much in line, while defaults ended up falling and originations skyrocketing. So this also looks very good. Personal loan default rates falls under two different categories, as they've started to sell late stage delinquent loans, but they've put this into two categories. In blue is after those late stage delinquent loans have been sold and before they were end up sold. So even if they kept them on the books, those interest rates would still be falling. Because they are actually getting a nice benefit from selling late stage delinquent loans, it actually falls down to 2.65% as their actual default rate. Another interesting thing that we saw was FICO scores for student loans, home loans, and personal loans. Quarter over quarter, all rising. Student loans went from 768 to 773. Home loans went from 749 up to 750, and student loans went from 743 up to 745. So they're actually taking less risk. It's not much of a difference, but they're taking less risk quarter over quarter while originating so many more loans. So you're taking on additional risk by looking for more and more loans, even though a lot of that additional risk that they've been taking on has been in orange, which means that it's actually for other institutions. In blue here is what SoFi writes for their own books. Even then, they still go and sell some of those loans to other institutions as well, but that's actually fallen quite low in the past couple quarters, where the high majority of loan sales that they've been seeing have been only for the loan platform business. 100% of loan platform business deals are sold on to the marketplace. Another interesting thing is the amount of interest that they're earning on their overall loan book that continues to climb. So on an annualized basis, we're looking at nearly $811 million. If we go to the total loan portfolio, you can actually see this climb up to $33.3 billion, nearly a $3 billion increase quarter over quarter. Personal loans increased, student loans increased, and home loans also took a massive increase from 377 million up to 756 million. If I go over and look as a percentage, you can see that personal loans are actually decreasing, okay? Still above 50%, somewhere around 55% of their overall loan portfolio, but student loans and home loans are increasing as a total percentage. But then we have credit cards. Credit cards smashed it this quarter. Look at the amount of new credit cards that they ended up signing quarter over quarter. I mean, massive increase, the largest that we've ever seen in company history. However, the default rate per, the total book of credit cards, which is now getting up to $440 million, fell to 5.8%. This was last quarter at 6.6%, a massive drop from 9.1 all the way up in Q1 of 2023. This was 16.4%. Way too high. But now we know that the average that you want to be a part of is somewhere between 2% if you're a god tier credit card company, all the way up to 8%, which is still acceptable. The last two quarters have been very much acceptable and headed in the right direction. Now, for business debt, this is also quite interesting. What we end up seeing from SoFi is that we can follow their preferred shares, convertible notes, revolving credit, and the interest rate that they charge for each of them. So what we see is that at the end of 2023, they completely got rid of their preferred shares, which they were paying out 12.5% for annually, and used convertible notes to fill that gap, for which they were only paying essentially 0.9%. The interest rate ended up changing from 0.4 to 0.9, but they were replacing a 12% interest rate debt. We also see revolving credit, which continues to stay at the exact same level that it's been for many, many quarters. But the percent, because of the interest rates as of last quarter, dropped from 5.9 to 5.7. So what this means is that the total quarterly amount of business expense that SoFi has to pay, not including what they pay for all of their loans, ended up continuously falling. Year over year, they were paying nearly 11 million. Now they're paying nearly 10 million a quarter. But this was 20 plus million at one point, or nearly 20 million back whenever we had those preferred shares. So they're handling their overall amount of interest. The total amount that they pay, 2.2%, is looking much, much better than where it was before. Everything is headed in the right direction. But then, ladies and gentlemen, we got website traffic for Q4, mainly October, but it allows us to see a little bit inward into how they're doing. For October, we ended up seeing a new record high, 23.9 million total views on SoFi's website, with an average daily volume of about 800,000 people, also a new high. But this was an increase year over year of 45%. If we end up taking a look at this on a quarterly basis, if I were to extrapolate out that they hit the exact same level for November and December, we would reach 71 million total visitors. Last quarter, we ended up thinking, based on the first month, if we extrapolated out, that was going to be, I think, 63 million. And then the months after that were even better. So it ended up being at 65.6 million. So that rate even increased. If we look at this on a percent change year over year, starting from the earliest point, so we don't have details of how it's grown back here, but starting from Q2 of 2024 at 22%, Q4 2024 at the low of 18, and then ever since then, it's just climbed up. And now Q4 is looking to be an explosive quarter, growing 48% on the total amount of new website traffic. If this is any indication of what we've seen previously, it means that we're going to have another record high for new amount of members coming on the platform. Another very interesting statistic of what we saw from their customer acquisition strategy to the amount of new members that we've seen on the platform has also brought down their total customer acquisition payback period. Now at only 13 months, that is how long it takes for SoFi to go out and pay for a user. They come on the platform, and then for them to pay back the amount that it costs them to come onto the platform. If we continue this strategy, hopefully that rate will continue to come down, which will allow us to pay more for a user because, well, we get it back very quickly. Everything from this 10Q looks amazing. I mean, honestly, I could not be happier as a SoFi shareholder. I'm aware that the market is seeing a little bit of jitters right now, but I think that's more broad-based and just a little bit of a stock market shakeout rather than SoFi-specific reactions. Everything that we're seeing there looks phenomenal. But ladies and gentlemen, that's all I have for you guys today. Make sure you guys hit the subscribe button and the notification bell. That way you guys know exactly when I post another video or even a live stream. I go live every single day to talk about my reactions to the stock market. So if you guys want those updates, you guys know what to do. Thank you all so much for watching. Really do appreciate your time, but bye for now.